Toronto's once booming condo market finds itself at a crossroads, grappling with a confluence of challenges that have dampened its once ebullient spirit. The market, once a beacon of prosperity and a magnet for investors, is now exhibiting signs of distress characterized by a perfect storm of oversupply, declining sales, and plummeting prices. Experts and analysts, once optimistic about the market's trajectory, are now sounding alarm bells, cautioning that the city's housing crisis is far from over and may even be exacerbated by the current condo market downturn. The current state of the Toronto condo market is one of uncertainty and volatility. The exuberance that once characterized the market has given way to a sense of caution, as both buyers and sellers grapple with the implications of this new reality. The days of bidding wars and sky-high prices seem like a distant memory, replaced by a more sobering landscape of price drops, extended listing times, and a growing sense that the market has shifted in favor of buyers. The question on everyone's mind is whether this downturn is a temporary blip or a harbinger of a more profound correction in the Toronto real estate market. The current situation stands in stark contrast to the heady days of the pre-pandemic boom, when Toronto's condo market seemed invincible, defying gravity with its relentless upward trajectory. Back then, demand seemed insatiable, fueled by a confluence of factors including population growth, low interest rates, and a shortage of ground-oriented housing options. Developers, sensing a golden opportunity, rushed to break ground on new condo projects, eager to capitalize on the seemingly insatiable appetite for urban living. The result was a surge in condo construction, with thousands of units being added to the city's housing stock year after year. However, the pandemic, as it did with so many other aspects of life, upended the dynamics of the Toronto condo market. Lockdowns and restrictions led to a mass exodus from the downtown core, as people sought out more spacious living arrangements in the suburbs or smaller towns. The shift to remote work further diminished the appeal of downtown living, as the need for proximity to offices waned. As a result, the demand for condos, particularly in the downtown core, began to soften, even as new units continued to flood the market. The warning signs were there for those who cared to look. Even before the pandemic, some market observers were sounding the alarm about the potential for an oversupply of condos in Toronto. The pace of construction, they argued, was unsustainable and outstripping demand, particularly in certain neighborhoods. However, their concerns were largely dismissed by those caught up in the market's euphoria. The prevailing sentiment was that Toronto's strong economic fundamentals and desirability as a place to live would continue to drive demand, absorbing any excess supply. The pandemic, however, exposed the vulnerability of the Toronto condo market to a sudden shift in sentiment and demand. As the initial shock of the pandemic wore off, it became clear that the factors that had underpinned the market's growth were no longer as robust as they once were. The flow of newcomers to the city slowed to a trickle, as borders closed and immigration ground to a halt. Interest rates, though still historically low, began to tick upwards, increasing the cost of borrowing. And the allure of downtown living, once a major draw for condo buyers, had dimmed, replaced by a desire for more space, affordability, and access to green spaces. The result of this confluence of factors is an oversupply of condos in Toronto, particularly in the downtown core. According to data from the Toronto Regional Real Estate Board, the number of condos listed for sale in the city has surged in recent months, while the number of sales has declined. This imbalance between supply and demand is putting downward pressure on prices, as sellers are forced to compete for a smaller pool of buyers. The days of multiple offers and bidding wars are largely a thing of the past, replaced by a more balanced market, where buyers have more negotiating power. This oversupply is not evenly distributed across the city. Certain neighborhoods, particularly those dominated by high-rise condo towers, are feeling the effects more acutely than others. These areas, once popular with investors and young professionals, are now seeing an increase in vacant units and a decline in rental rates, as landlords struggle to attract tenants. The situation is further complicated by the fact that many of these condo units were purchased by investors who are now facing the prospect of negative cash flow as their rental income fails to cover their mortgage payments and other expenses. The price plunge, affordability concerns, and rate hikes take their toll.